Finance Freedom Mastermind. I'm happy to be live with you all today. Again, May Doldelau here. YesFinanciallyFree.com. If you're not a subscriber to the email list, then go to YesFinanciallyFree.com right now. Put in your first name and email address, and you will get a free ebook, Working Parents Guide to Financial Freedom, sent directly to your inbox. And you will get great email messages on when I will be live, what exactly I will be broadcasting about, and links to all the replays and all my social media channels and on my blog. So today we're talking about something crazy and totally real, and that's negative yielding bonds. What are negative yielding bonds, and why would anyone buy them, right? A little bit about myself. In 2011, I had a lot of debt, over $40,000 of debt, all credit cards, no property, didn't own any property. But by 2016, April, paid it all off. We had improved our family's net worth by $500,000, making almost $500 a month in passive income. I quit my job. I was a full-time assistant at a bank here in Hawaii. It was a good job, but I didn't want a job anymore. I wanted to be a full-time mother, and I created a business called Finance Freedom Mastermind, where I coach clients on how to create passive income while also improving net worth, creating more free time, creating financial freedom, and paying off debt all at the same time. And if you want to learn more about Finance Freedom Mastermind program, go to YesFinanciallyFree.com and go to the products page. And all of my mastermind are right there for you to find out about. Now, let's talk about today's topic. Okay, hi, welcome. Nice to have you on. So we have Sadat from Turkey. What are negative yielding bonds? Negative yielding bonds are bonds that guarantee you will lose money. So why would anyone buy a bond that guarantees they will lose money? Okay, let's talk about how do bonds even do that, right? So one way it can do that is somebody issues a bond, okay? Let's say they lend $100, okay? So they need $100. They borrow $100 from you, okay? So you lend them. There's a bond, $100 bond, and they promise to pay you. Let's just make it easy. No interest. So they're just borrowing. They're going to pay you back. It's like a bond where you make no money. That's not negative. It's like zero. But just for the sake, we could make an interest rate on it. Let's say it's 1%, okay? They borrow $100 at 1%. Okay, so at the end of the year, you will get $101 back, okay? Does that make sense? $100 plus 1% interest. Now, let's say you sell the bond to somebody else, and they pay you $102 for the bond. So they pay you $102 for a bond that's only worth $101. So they are guaranteed to lose $1. Does that make sense? That is a negative yielding bond. That's how they come about. Now, governments can also issue negative yielding bonds. They can actually say this bond we are issuing will have a negative yield. You lend me $100, and in 10 years, I'll give you back 95. All right, that's a negative yielding bond. Like, you're guaranteed to lose money. All right, so now that you understand what a negative yielding bond is, and how do we have negative yielding bonds? Also, another reason you have negative yielding bonds is because the economy, the way it is, right? People want to put their money somewhere safe. They're afraid, right? So they drive up the prices of bonds. They want to buy bonds, even if buying the bond will give them less money than 10 years. All right. They are willing to do that because they're afraid that the stock market will go down even more than the bond. And they feel like the bond is safer than the stock market or wherever else they're thinking of putting their money. Okay. So they feel like they have no alternatives but to lock in a loss in a safe investment. At least it'll be there. And they probably think the value of cash is going down because of deflation, right? And the value of cash will be less than the value of the bond. All right. There's a lot of factors going on here. I actually looked at some websites and did some research this morning to see what, because I don't understand. I'm like, the only thing I can think of is they think cash is going to be worthless because obviously if you hold on to your cash, it's worth more than putting in a negative yielding bond. Now, if you think your cash is going to be less valuable than that bond, that's the only thing I could think of because why would you throw away money, guaranteed throw away money? It doesn't make sense to me. So let's find out. So I found an article. So you guys understand what negative yielding bonds are, right? They cause you to lose money and they will end up with less money than what you purchased them for. Okay, so that is what it is. They're usually issued by governments in countries with low or negative interest rates. They're bought by investors who want to keep money safe and avoid worse yields than that. This is a very interesting concept. Sub-zero debt is growing. Corporate issuers are starting to issue bonds with negative yields as well. I went on to my Schwab account this morning and just to check how bonds are doing, and their corporate bonds having negative yield. Yeah, short-term corporate bonds have negative yield. And there was also some municipal bonds. I think it was the same, negative yield. Now, not all of them, but they are beginning to have negative yielding bonds. And I was like, why would anyone buy these bonds? So that's the thing. Okay, so you understand what they are. You're guaranteed to lose money if you hold it to maturity, okay? All right, so who issues and buys negative yielding bonds? It is not new to Europe and Japan. Apparently, they've been issuing negative yielding bonds for a while. In Japan, the interest rate set by the government is actually below 0%. With a negative interest rate, the central bank charges banks for keeping deposits. This is a monetary policy that tries to encourage banks to lend out money and stimulate the economy, all right? Because if you just hold on to the money and don't lend it out, you're actually losing money. So you better find a way to lend it out or just don't have it, right? The same strategy has been used by European central banks. So that's what's going on, guys. These countries are actually having negative interest rates. As countries put in negative interest rates, it leads to the creation of government bonds that have sub-zero yields. And investors still purchase these bonds as they have good liquidity, easy to buy and sell, and there are few options safer than a government bond. As more fixed option securities become negative yielding, the yields offered by bonds will continue to enter the negative territory. Thus, some investors buy bonds because they believe future bonds will be worse. Oh, God. Yeah, so they believe future bonds will yield even more negative. So if a future bond yields even more negative, it might actually drive up the price of your current negative yielding bond. So if you sell it before maturity, you might actually not incur a loss. That's another issue. The future of bonds, negative yielding debt issued by governments. This is from CFI, corporatefinancialinstitute.com, by the way. Negative yielding debt issued by governments also has a spillover effect on other fixed income securities. Even high yield bonds or bonds that are considered higher risk are offering negative yields. This is illogical to a lot of investors because high yield bonds should offer higher yields. As mentioned above, interest rates set by the central bank impacts the yield on bonds. And on July 31st, 2019, the U.S. Central Bank lowered rates for the first time in a decade. This caused the amount of debt with sub-zero yields to reach $14 trillion for the first time. This increase, more than a quarter of investment-grade debt, is yielding less than zero. So there you have it. Fascinating, right? Okay, so that's what negative bonds are. Some reasons why people would buy negative bonds. Let's see if I can find any more information on why people would buy negative bonds. Here we go. Here are four, this is from MarketWatch. Here are 4 reasons why investors might snap up negative yielding bonds. They've struggled to get their heads around negative yielding debt, okay? U.S. investors look with incredulity at 17 trillion of negative yielding bonds across the world. Global economic concerns, easier monetary policy by central banks, okay? Bag hold. Investors who scoop up negative yielding bonds are betting that the value of securities to keep rising, in effect wagering that there are other bag holders. With the European Central Bank widely expected to restart their asset purchasing program, European bond buyers could be relying on the central bank to hoover up their portfolios of negative yielding securities. Although investors buying bonds with sub-zero interest rates are in effect paying for the privilege to hold on to an investment, that cost can be more than the offset if the securities price rises. In July auction for 4 billion euros of 10-year German government bonds, 0.073% sold at a negative yield of 0.26%, but at a premium price of $102.06 to the euro. The benchmark bond is now trading at a price of $106.09 to the euro, meaning that investors who scooped up debt at last month's auction actually reaped a gain of 4% from the increase in the price of the debt. So I talked about that before. Everyone is buying this stuff like crazy because there is too much money in the system from quantitative easing, too much money going to the government bonds. On the other hand, market participants say it's unclear if buying fixed income securities is an expectation of future price gains remains a sustainable trend. So that's one reason. Safe assets. People are buying them because they feel like it's safe. When risk sells asset sell-off, the issue of negative yields on government bonds may be overshadowed by a proven ability to rally during times of market distress. So if you're, like I said, if you're losing way more in the stock market, a guaranteed loss in bonds doesn't seem so bad, right? Okay, we're going to finish up here. But thanks for being on the live, and learn more on the blog, yesfinanciallyfree.com. See you again later. Aloha. Subscribe to the YouTube channel and click the link below this video. If you are on Facebook, thanks